Okay, so welcome everyone to this week of trading, another one. Let's see how this one come around. We're going to start the seminar to give you guys an invitation to read the Forex overview that we wrote over the weekend. The reason being is as follows. We did yesterday around the 80 regular pairs that we do or charts that we do over the weekend, and we draw the same conclusion. This market is a toss that it can go both ways. This market can go both ways. This market can go either in favor of the dollar or it can go against the dollar. There is nothing that say that it has to go one way or the other. Now, that was the overview. That's why we believe there. And then we're going to start with this idea. This that you guys see right here is the oil chart. The oil chart, as many of you know, was the chart that makes us call the bounce in risk, right? Now, that oil chart is very clear. 1, 2, 3, 4, 5, 6, 7 swing to equal legs. Of course, a correction is coming. Now, that oil chart is getting close to this level right here, which is around 94.50 area. That level around the 94.50 area is the 50% retracement of this whole move from the top, making the case that if oil is gonna do only this move in oil is a three-way. This oil move is only a three-way move. So technically, if this is a three-way move, then oil is gonna do this. If this is not a three-way move, then oil is gonna do this, and it's gonna keep going higher to the next level. That's as simple as I can present it. So, as a waiver, you need to be smart about it and play this drop right here. All right? Why? Because it looks like oil is the one that is leading the path and is getting close to a 50% retracement. In other words, it can drop from here on the proposed B way. But now, this is oil, right? Clear what I mean? If you go to the chart of oil and you put out it, let me put the candles on the oil. Let me put the candles on it. And then you're going to be able to see that from the lows right here, you have what it looks to be a well-defined three-way move right there, right? That it looks like three-way move, but also looks like an ending diagonal right there in oil, right? Now, why do I say that? Because the market can go, and then this is the 4 hour. This is the 4 hour. And the 4 hours, we come to the agreement already that a cycle ended possible right here, and then you have A, B, C, ended right here, and then you have A, B, and then this is one of the counts. You got 1, 2, 3, 4, 5. But this is very big also, right? Now, if that's the case, no matter what it is, this pair is going to drop. And if oil drops, the dollar is going to trade higher. So I see a 10-minute move or a 10-minute structure most likely taking place there. And that should bring oil lower. Now, if you put the RSI that we're going to do when we get back to the individual oil pair, because and right here is when we do the market correlation thing, you're going to be able to see that there is a huge divergence in this momentum right here, in this move. Now, the other count, which is the bullish one, ended when you have a flat, when the real move ended right here as a W, and then you have A, B, C as a W, and then you have 3, 3, and then that count is going to make oil going lower in the C way of S, and the market bounce to the outside. So technically speaking, you got to play this way down. Either if it's this or it is the small one. All right? So what oil is telling you is that the dollar should get strong this coming week for either the Rafi move, like I called it already, or the C-way move with more risk to come. That's what oil is telling you. Now, let me go back to the daily chart and present something to you. Let me take the candles in oil and then now Rafi is thinking. Now, this is oil right here. Let me add some risk assets. As a trader, you need to understand one thing, guys. There are risk assets and risk of assets. The risk assets, they're gonna trade alike. Look, this is the oil trade with the S&P. So if you look at it, you should be able to see how correlated they are. And then the S&P recovering is also in 3 weeks. In 3 weeks. Like the oil is in 3 weeks. Now, S&P dropped questionable here. It looks corrective. And then S&P can be doing also an S-way to go higher again. Like oil can be doing the thing. Now, this can be a path that the market can follow. Let's keep adding right there assets, risk assets. And then we go to the Aussie yen. The Aussie yen follow risk assets, as you guys should know. Thank you, Michael. Let me double check, guys. 1 second. Because they're telling me that the link in, give me 1 second, guys. The one that I posted on the room is not working, right? That's what you say? Okay, let me resend it, but let me keep going. So technically speaking, what I'm trying to say is that these risk assets, they're working pretty much like a clock, one after the other. Now, right here, oil gave us the clue that the bounce in risk was coming. And we called the bounce, as you guys know. Now, neither of these assets are calling for or giving you the clue. Only oil is telling you that seeing the charge on oil is telling me that some weakness in oil in general in risk will happen. And that brings me to the idea that we're going to go down in a seaway in risk this coming week. That's what I get for these risk assets. Now, you guys can see now, I'm going to add another thing, which is called the dollar index. And you guys going to see how the dollar index trade also in a different way. In other words, when the risk assets going higher, the dollar index, of course, goes lower. But you don't get anything for the index either. The index did a questionable recovery, many including, that it can be laboring as a FI, but still, and I've been learning for experience, every time that I see that type of movement is a trap. In my book right now, I would say this. I would say that it's better to play thinking the C way of a proposal S, and then if the real move happen, working to the, we should be working and say, here we are riding the move. So that's how I recommend it to play. Now, let me take all these charts and let me put only two charts, which is going to be copper in green and the S&P in red. Now, if you take a look at it, again, copper being a barometer of risk is showing the path also. You see, they are well correlated. This is a daily chart. Look at the weekly chart. Very well correlated. No question about it. Now, copper going to the day, back to the daily, you can see that from the top right here, it did a three-way move to the downside in a way of a flat. Now, copper is supposed to be correcting this whole wave. And then if you trade the Fibos there, you see only reach the 30-AO2, right? So that makes me to believe, I don't want to get so one side like we usually do, because in my book, the big way should get, as you guys know, to the 50% retracement. But we just have an experience that didn't. So that opened the door right there to don't go that strong in that way. You know what I mean, Isa, right? And all orthodox when it comes to Elliott Wave and Fibo, in my view, a big way should get to the 50. Sometimes doesn't happen, but I know for a fact two things. Nothing is writing in stone. Yeah, oil is on 50. Exactly. That's what I say, that we should get witness. But if oil is going to crash, copper is going to crash. But if oil is cheating, copper is going to keep going higher and oil is going to keep going higher after 3. Now, let me get to the point. The point being is this, that we only got right here a 38 or 2%. But if you go small, in copper to the 60-minute chart, I'm going to show you this. Let me put in copper the candles. And let me take this for a bit. You're going to see that copper did a 1, a 2, a 3, a 4, and a 5-way swing to the downside. Now, copper retraced from the 618 right there. You see it? It went back from the 618. And it looks like going even small, that is going to make an impulse out of the 618 when you have 1, 2, 1, 2, 3, 4, 3. Copper should trade lower today and then recover in 3. But most important is this, that copper, after doing a 1, 2, 3, 4, 5, 1, 2, 3, copper should trade lower at least in one more leg down to around this area before going higher. If you take a look at copper and at the daily, and then if, in other words, copper should do at least trade around this area if this is not the top of the B wave. Now, how you correlate the whole market with this? Very simple. If copper is going to do this structure here, right, then I'm going to be putting out the rest of the risk trades. One second. Let me get back here and put the line. All right. I'm gonna be doing it one by one. This is copper in green. Guess what? Is copper is gonna do that structure, and then you add oil to the equation, and then oil is doing a flat when oil is gonna trade this area. This was the W, and then you got A, B, C, and then oil is gonna trade also 3 ways to the upside. All right. Then you're gonna code, you have already oil and you have copper, and then you come right here and you add the S&P in red. S&P did W, and again, S&P is gonna do a way down and most likely another leg to the upside to around 1320, 1330 area. And then you can be adding on and on and on and on. Now, that's going to bring to the real issue, which is the US dollar. Why? Because if you take everything out, and you leave only the dollar, we are favoring in the dollar still the idea of the nest, right? And then if the nest is the one in place, from here you have 1, 2, 1, 2. But the low on the dollar here was 74.72 area. The low in the proposal nest, let me put the candle for you. In the proposal net, the lows right here is 73.41. 73.42, I'm sorry, my bad. So that's telling me that then the dollar should do this. The dollar should correct here, higher, and do a new low, but needs to respect this area. That's what it's telling me right there. It's possible. Now, this is the scenario, the principal scenario that we are following as of right now. All right, that's the principal scenario that we're following as of right now. And this is the message that I want you guys to get. The market is a toss. The pairs like the euro, dollar can go for a crash to a midpoint. In other words, from current levels around 130, where it is right now, 137.78, the euro dollar can go to 112 and crash. The euro dollar can go to 145, 146, even 144 area in the mid-level, or even 152, and the euro dollar can go to even about 160. The market in the monthly and in the weekly is, and even in the daily, is a toss. Can go. There is no definition in the market. That's the only thing. That's the message that I wanted you guys to understand. Now, what is the safest way is that the dollar, seeing this recovery being corrected, seeing copper doing sideways, and seeing oil losing momentum to the outside minimum, the dollar should get this leg of strength. And then how you play it? You buy the dollar. If the dollar is going to become king and go that way, so we're going to be riding the wave. If no, you need to know where you enter into it. That's the message that I want to say. And that's what I got from the market correlation sheet. Now, we're going to cover cable and show you guys what I think about cable. Why? Because cable is very clear to me, and cable is showing the path. Now, that's the dollar right there. Let me show you guys the dollar in a small time frame so you guys can see it. This is the dollar in a small time frame. It looks like the dollar looks corrective from last week of high. 1, 2, 3, 1, 2, 3, A, B, Z, another 1, 2, 3, and it looks like it did a three-way here, and it looks like the dollar is going to look for 76.21, which is equal to 139.20 area in the euro dollar, right? It looks very clear. This 5 ways looks like a 5 with an extended 5. I don't disagree with it. I can live with it, but I would rather see no extended 5 and the move have ended around this area, and I was more sure about the path. As of right now, there is no sure thing. The only sure thing is that another leg of dollar strength should happen during this week. That's the message. Now, The same with the S&P. I don't want anybody to tell me that this is a clear five-way move, because it's not. In my view, it's not. We're labeling like this, but we're labeling as an A. It can go both ways. This is a type of ways that after the fact, you either change the label to be an A or a 1. You know what I mean? This is the type of the wave. You know what I mean, guys, right? If 3 days from now the dollar crash and gets weak, everyone's gonna label as an A. Everyone's gonna label as an A. If no, you're gonna be. Yes, I'm gonna cover that now, Rafi. If no, you're gonna label as a 1. But it looks like the recovery in the S&P, it can be, I can see it like 1, 2, 3, 4, 5, and then a flat 2, and then a huge nest, which I don't believe is the case, or corrective with the S&P going to towards 70 and another leg to the downside. Now, oil, like we covered already, but I want to show you guys the real chart of the oil. Look, it looks like it's right here. It looks like a 10-minute move. Not only that, when you put the RSI on it, you guys can see a very clear lack of momentum to the upside right here. Very clear lack of momentum to the upside right there. So that's the case. That's what I like, the idea of a flat also. It's possible, and then a C way, and then higher again. And then you have A, B, Z, ending like we have it as an alternative. I'm going to show you. This is the most bearish one, but usually the RSI is telling me that this is not the right count. The RSI is telling me that is the other count, the one that is in place, which is this one. Let me put it to you guys right here. This, because on the three-way move, in a three-way move in the RSI, A, B, C, the C of the RSI is the higher rate. In other words, there should not be divergence within the RSI in a three-way move. I can prove it to you guys, and I've been seeing it for years, that that's not the case. So technically, if that's the case, this is the top of the three-way move. Started here and ended right here. And now we are A, B, and C. And then C in cable, C in copper, and C in that RSI, it makes me to believe that we're going to see another leg higher in the dollar, but then the market again is going to trap down every dollar bull. One more time. In 2 years, I lost the counts, but I've done it over the last 2 years. The market has trapped the dollar bulls more than, I believe, 15 to 20 times. And I believe that most likely we are in front of another trap in the dollar. But nothing is sure. But you have to play this weakness that should happen in the C way of the dollar strength. Now, let me change the E signal for a second, and let me show you some individual pairs that I show in the past. me 1 second. Any question, guys, so far? I'm going to tell you, Rafi, what you're asking me there about cable. I'm going to tell you why we are not. Your scenario is possible. I don't disagree with it. But I'm going to tell you why we see sometimes something different right there. Now, let's start in cable. Let's start with cable. On the daily, everyone knows that we've been using oil and cable as reference of the risk trade. So technically, we are playing the idea that the D-Wave ended right here. Now, it looks like that's the case, or this can be the B-Wave of this, but that's only if you see cable. The market correlation is not supporting the idea of cable going here and then higher, because that's going to make oil going to the new high in some degrees. Now, like I say on the weekly video, if this was the end of the E-Wave right here in cable, you should see an impulse drop from here to here. Then when you go small, like a 1 hour, you can see that this have nothing of impulse right here. This is corrective in my view. When you have A, B, C, A, B, and then cable, it's going to trade higher tonight, like around 161, and from there, cable should drop. But no, in the thrust of the triangle, cable should drop into the B-Wave, is drop into. No, that's not an expanded flat. This is no impulsor right here. And cable, it should drop into a C-Wave of the E-Wave. And that's the scenario that I like, to be honest with you. That I'm going to buy the dollar 100%. But I believe that at the end of the day, there are more chances around the market that this scenario, like in the euro, is the one playing out when, let me see, 1 second, that this scenario is the one that is, I just keep putting the same one. I believe that this is the scenario that is playing out on the euro. Look, right now it's 37.66. So if that scenario is the one playing out, most likely we're going to see this on the euro. A test of the trend line around 134 and another strong reaction to the outside, looking for whatever the equal legs or the 76.4. And this is the scenario that we're favoring on the euro. I gotta be more than honest to you. This is what we like as of right now. Now, everything, remember guys, is based in copper doing a deeper correction, and also based in the idea that cable is not trusting for the triangle. That's a fact. Cable is not trusting for the triangle yet. Cable is either in a B way of E or is still within the D way. But if it's still within the D way, cable needs 2 more lows to complete a corrective structure. So I don't support that idea because the 2 lows being needed to complete the structure. So, but I believe that is basing everything. I think that the most likely scenario is that cable goes into a C way of B, of E, and then that the rest, the euro goes to 134 and then higher to 144. No, cable is in his own war, but cable is part of the dollar index. He's in his own war with the structure, but what is clear is that cable needs to trust for the triangle. And trust for the triangle is an impulse. No matter what it is, it's impulsive. And that's not the case. That's what I mean. So, technically speaking, right here, what I see is that I'm going to be selling the euro. If this happens, congratulations, we are in. Otherwise, I won't get surprised to see the euro bounce from this trend line that comes today, a little bit lower, but should test around the 618 right here, which comes 35.70 or 34 area, and bounce again one more time to the highs. So, like I said at the beginning, nothing is clear. Everyone can have their own personal bias. As a service, Elliott Wave forecast, what it's telling you is that we are in open water when the market can go both ways, and the market has not defined a mid-term bias. Short-term bias, yes, I believe that the dollar is going to get strong. Mid-term, what I call from 480 to a day, is a toss. Now, somebody asked me yesterday, why do we keep a long US dollar bias? And I'm going to use this seminar to respond to the client. It's very simple. It's because of this. Because in the worst of the scenarios, and this is something that many traders do not get it. From this area, 120, that happened in 2001, the dollar did, this is the US dollar index, it did 1, 2, 3, 4, 3. This is one of the counts. It can be labeled to end the move right here. But in the monthly chart, the biggest set-off in the dollar already passed. This is the chart why everyone is a dollar bull. But what people don't understand is that there is no guarantee yet that this is the bottom in the dollar. Nothing says so. Nothing. Look, you can label it like this: 1, 2, 1, 2, 3, 4, 3, It runs pretty good, Elliott Wave Y, and then 3, 4, and the dollar can start doing this sideways and drop. But at the end of the day, the recovery in the dollar that everyone is expecting, sooner or later, is going to happen. Sooner or later. Doesn't say that needs to be from here. And that's the point. That's why if you check on the side, there are 3 different labeling of the dollar. Another one is this one. It's an ending diagonal from here. It's very possible, and you got one new low on the dollar. And another one is the bullish US dollar, the one that calling the low right here, and that makes a next asset scenario. Either one of the 3, maybe the way, that's a good point, Rafi. Maybe wave 4 on the ending diagonal, and maybe even the wave 3 is no ended. You follow me? No. I see this wave 3 like a count. I see this wave 3 too short compared to the wave 1. Maybe we're going to see this, and then this can be the end of 3, and then you get a 4 and another 5. Remember, no matter what it is, it needs to trade to minimum 66.12. So everything is possible. That's my open mind. That's what my trading experience telling me. Don't worry about it. Trade the next move. All right? Now, the rest of the pairs, as you guys know, everything is a toss. The Singapore dollar, it gives me confidence because I see a clear 5-way move out of the lows. And I've been trying and trying to find a way that I can be saying, oh, it's cheating. The 5-way move is a cheater. And I don't find it. I believe that it's a very good word structure 5-way move. And the only thing that can happen is that this is A and we are in the flat, and then it's going to go to 123. But I think that this is a bottom in this pair with a 95% insurance. So that's why we are still favoring the idea of the 1-2 on the US dollar and in the dollar. Why? Because we trade based in market correlation, not in an only one single pair. All right? Now, the rest of the market, to be honest with you guys, I mean, New Zealand did a very nice 5-way move from the top. The better structure on the whole market when it comes to the 5-way move, it was New Zealand. Very confident that we should get at least another leg down from around 81 area, 80.77. Aussie, very questionable also. I know that there are people that they are forcing and they want to see a 5-way move. I don't see it. I see the divergence on the RSI, and I mention it, but I won't break my rules. And my rules is that 7 swing is correct. So I'm labeling as it, but also calling for another leg down. And so on and on. Even the Euro Pound is showing a very nice 5-way move. 1, 2, 3, 4, 5. And we're expecting a move to around this area, the 87, before dropping. That's what we like. So technically, overall, what we like is a decline in risk to minimum another leg before a possible recover in risk. Now, I believe that that's like running before you walk, thinking at this stage in another leg higher in risk. It's better if you take it easy and then you say, okay, what we're gonna see is nothing more that a seaway down, and then we go from there. That's my message. That's my message from the seminar. Now, any question, guys, that you guys have about any individual pairs, I will willing to answer to you guys. Any question, I will willing to answer. Okay. The dollar Singapore intraday. Michael, it's more or less the same idea. Like I have been saying, is this. You have, because I don't know if you use it. I don't know if you use it or not. This market correlate. You know, you use the correlation of the market, right? Now, if my intraday's idea is this, that at least 130, 131 is going to be seen in this pair from two levels. Either, because if you take a look, you have a clear 5 ways here. A clear 5 ways here. So that 5 way right there, that makes the case for a bounce in this pair from either one of these 3 levels. Now, you got the first bounce from the 50% retracement. This bounce, it looks corrective, but it's very small in price. You only see that it went to the 3802 of the previous 8 way. So this bounce can become 2 ways. Either it's going to go here and then it's going to drop here and higher, or this bounce can get straight lower to here or here and higher. That's my best bet on the Singapore dollar. Why? Because the market correlation is telling me that oil is going to get weak. The market's correlation is telling me that copper is going to get weak. The market correlation is telling me that the dollar should get strong. And if the dollar gets strong, guess what? The Singapore dollar is going to get weak. Now, in the 4 hour, you have to see it this way. You got the 1 and the 2, and then you have the 2, the biggest degree 2, you have it right here. Now, this wave 2 do not get confirmed until this high is broken. Otherwise, this wave 2 still can be in place, and the market can do this here, and then do this, and then do that. And then that can be the case. Now, if that's the, let's assume that the same way that this is the 618 of the proposal wave 1. Let's say that the market goes to the 618 and we got fill in the second entry. If that's the case, we're going to see a move minimum to 130.49 in that pair, in the worst case scenario. Now, if you take a Fibo of this area, we are very close here to the 618, like the dollar. So maybe he goes to the 76.4 and bounce to the 76.4 on the downside. There is a possibility, still, there is a possibility, still, when we have, like I explained the other day, because as a trader, you need to look at everything and you need to look at everything in this trading, that you have a flat in the middle here, and then you got A, and then you have 1, 2, 3, 1, 2, 3, and 5. If that's the case, we are going to be fine, because if that's the case, this pair is going to go deep here. We're going to be covering the entry, and then the pair is going to do this. That's what I see, Michael, from the intraday that's what I see for the intraday within the thing. I mean, you see, you have to look at everything. You know what I mean? You have to look to everything. But I think that we're going to be fine. We're positive. And the worst case scenario, I see 128 and dropping. But I need to see it around the board and see every single pair show me that path, and then we will know if that's the case. You know what I mean? Now, the dollar CAD, 1 second. Dollar CAD is very interesting here, because the dollar CAD, it looks like we favor in the idea of the nest because of the bullish that we are presenting into the market with the dollar. But the dollar CAD, it can be either nesting to the upside or doing the same scenario as everything, doing a B-way. You know what I mean? It can be doing like that, Richard. Give me 1 second. Let me show you the 4 hour on the CAD. Maybe on the CAD, this is A instead of 2. And maybe on the CAD, we're going to trade higher to around 103.64, 104.76. And guess what? Lower to equal legs. Nobody knows for sure about it. And that's why I believe that we've been very clear. We've been very clear in the seminar when we say we are open-minded when it comes to the dollar. The dollar is an open water. Nothing say that it's going to get higher like a rocket, but nothing say that it's going to be so and like no value on it. You know what I mean? So you gotta play it like that. You gotta play as a smart trader, not with a bias on it. That's my host mentioned, Richard. And the dollar CAD, like I say, is having a hard time around this area. That's why I was screaming the other day to get a new high from here, because that's going to confirm that this is the low. But guess what, guys? They will make it easy for us. They want to put it as hard as they want. And then that being the case, I mean, I don't like the CAD at the moment. I've been following the long trade and the CAD for a while already. I don't like it at the moment because between you and me, right here in the dollar CAD, from the lows, all you got is 1, 2, 3 ways. This high was a 3-way move right here, and maybe the dollar CAD, this labeling is all. Maybe the dollar CAD is doing, maybe the dollar CAD is gonna do a flat either. It's doing a flat either from here or from here. Maybe the dollar CAD is doing a flat. And then you gotta take the long here because you see that the decline from the top is correcting. 1, 2, 3. And so far the recovery also is corrected. So I think that the most logical path right there with the CAD is that, I mean, I would take a long around this area against a stop right here, but I won't sell it either way. As a right now, I won't touch the CAD. That's my humble opinion right there. Any pair, guys, that you guys want to explain? Guys want me to explain to you guys? How you doing, Raji? Any pairs? I see that. Yeah, 1 second. You want to Aussie. Listen. After Aussie, now I see a pair I want to show you to you guys. Okay. We missed that one, my friend. Unbelievable. I'm going to cover that F for you now. We missed it, man. Remember that we were saying that it's going to recover and recover, and it happened. And I was waiting for 75.20 to get long. I didn't get it there for 20 picks. I missed the entry, me personally. Oh, well. Okay, this is what I like about Aussie. ABZWS ABZ. I see 7 swing, and I see 7 swing here, and I cannot force the way to label this as a 5. So technically, I like to sell Aussie around 105.40 area to another move lower. That's what I like about Aussie. Now, the dollar yen, you need to start on the dollar yen, and you need to look at this, Ed. You need to look the dollar yen on the weekly before anything. Look, eventually the move is there. The dollar yen should be in a wave 4, and any trade on the dollar yen should, to the short side, should respect this diagonal. We were calling that the move, it would go to around 79 area. And then guess what? I was thinking over the weekend, during that day, that is amazing, this. This move is the one in May on the dollar. Then he stayed quiet. When the dollar got strong, he didn't move too much. But now you should get 3 ways to around the 79.80 area. The low was 79.52. You can check that we mentioned that I should get to 79.80 several times. We were expecting the low to be around 75.20 area, and they let it go to 75.58, so we couldn't write it down. But I'm expecting this. But if you see that it got close to the 80, that should be a great sell with a stop about the trend line. Now that's on the weekly. if you go a little small, this is the daily, and that's unbelievable what they did right there. Because look, I was expecting this. I was expecting 75.25 to go along. How many times do I say it? I say a bunch of times. Remember, Isaac, everyone, Ed, that I say we're going to get long dollar yen. Remember, guys? I was expecting this move to get filled right here. And that bouncing back 20 picks higher. Now, this move should get, look at the trend line is right there. So let me adjust it a little bit. So let me put the real trend line. 1 second. But the dollar yen, guys, is ending a huge, huge move. And the dollar yen should get, look, that's the trend line right there. 1 second. The trend line comes around this area, Ed. As today, it comes around 80.75. I don't think that the move is still completed. For my best count, it has one more low. So taking the risk around 80 with 100 pick stop above the trend line should be a great sell right there. And like I said to you, I was thinking yesterday that maybe that pair in some degrees is showing the path of the dollar, like an ending diagonal move. This is on the daily. Let me show you the 4 hour. It looks corrective. It looks corrective from the top right here. Like I say, I was waiting for that level right there because it was the 618 of the B way when C is going to be the 618 of the A way. That's what I was waiting for that level. But well, they ruled out another way around. Because look, that was the Japanese government buying, right? Let me show you something. It looks like they know Elliott Wave. They buy it at the 1.618 when C equal A. So maybe they know Elliott Wave right there. So this is what I'm expecting. Ed. If you want to get long, that's what the market is showing, long dollar. I think it should come from 77.54 or 77.7 or 77.07, looking for around 80 and then dropping back again. That's what I like about the dollar yen. That's what I like about that pair. Any other pair, guys? Now, I want to show you the Euro CAD. Very tricky pair. Gosh, unbelievable, this pair. Look, from here it looks like 1, 2, 3, right? 1, 2, 3. So, but most important at all, in the 5-minute chart, it did from the top what it looks to be a 5-way move. 1, 2, 3, 4, 5. Let me open it out so you guys can see it. 1 second. You see, it looks like from the top, it did 1, 2, 3, 4, 5 possible. But I see, let me see if I have divergence there. You see, it looks like you got divergence. It's kind of questionable. But this pair, if you look at this pair, on the 4-hour chart, this is the old count. The new count, I don't know why I'm getting. Well, we adjusted a little bit and we put right here, like this was a triangle starting A, B, C, D, E. That was a triangle here, right there, eventually. This is A1, and then you got, this is B. This pair sometimes, guys, got very ugly, structure-wise. And then this is A. And this pair also is showing 3, 3, and should come another leg of weakness when the euro is going to be weakened at the CAD. And then, look, the low right here is the 50% by the pit. We should see 136 and higher. Now, why do I say 136 and higher? Because on the daily, it's very clear the structure. When you got A, B, C, W, S, A, B, C, Y, and then you have A flat B, Z, and this is S. This was a three-way. You should expect a three-way higher to about a new high right here. So technically speaking, that's telling me this, that this is A, that we are in B, and this idea is supporting that the euro dollar, for example, is on the B wave of, that the euro dollar is on the B wave of this, the C wave of E. And then that right there, you should find on the weekly, you should find the final high. Is it the daily? 1 second. That should end the move, and then the euro should get very weak. Because this is the weekly structure when you have A, B, C, W, A, B, C, S. You got A, and that's why we've been saying that this pair should reach minimum 150, and that should come with the next round of buying within the euro group. That's what we like, and we've been saying this for a while now. Any other pair, guys? I think it's very clear right there, at least in my eyes, what we are expecting, a round strength within the US dollar, and then to see if that strength become the real move or another trap into the dollar. That's what we like. And I think that cable is showing kind of that path right there. Any other pair, guys? Okay, guys, if no more questions, so we're going to leave it there. We're going to open, we're going to do the recording, and then we're going to keep the euro dollar share from 139.20 area that we have right there and see what happens with the whole market. All right, guys? So see you guys later.